The Federal Reserve is expected to hold rates steady at its policy meeting this week, and this will be the first meeting taking place with Donald Trump back in the White House. Trump is already putting pressure on the Fed, making remarks last week at the World Economic Forum, demanding interest rates come down immediately. Here to discuss is Robert Kaplan, Goldman Sachs Vice Chairman and former Federal Reserve Bank of Dallas President. Rob, thank you so much for joining us. I think we have to dive into the political aspect of this a little bit. You know, and Jay Powell, of course, has been very steadfast in pushing back against any suggestion that there would be political pressure brought to bear successfully on the Fed. Do you think how does he sort of toe that line as the pressure does get to be more?
So let me explain it in stages, the way I think Jay Powell is thinking and the way I'd recommend he think. Number one, inflation progress is stalled out a little bit. Some things are getting better, some things are getting worse. We're going a little bit sideways, stuck in the mid twos. So the Fed's cut 100 basis points, and I think it's appropriate to pause, and that's what they'll do in the January meeting. In addition, you've got 5 big structural changes going on right now away from the Fed. Government spending is going to get restructured, and I think government spending will be cut. Some of the previous programs will be put on hold with the intention of lowering debt to GDP, or at least moderating its growth. There's going to be a regulatory review in every industry with the intention, I think, to unleash more productivity growth. There's going to be an effort to lower energy prices and improve the whole energy ecosystem from drilling to transmission, refineries. We'll see if it succeeds, but that's the intention. We know we're in the middle of deporting a certain number of workers. We just don't know how far the deportations will go and how much workforce growth will be. And lastly, you've got the whole tariff discussion. Is it a negotiating tool? Are they actually going to be put on? What's going to be the treatment of Mexico and Canada in particular? Because that's what allows U.S. companies to domicile here, many of them, the intermediate goods. So got all that uncertainty. That's another reason to pause. And I'm not saying how long they're going to pause for, and I don't think he should say. They're going to skip January. He should then. They will be at the Fed, I would guess, furiously trying to understand these different policy changes and understand the impact they'll have, but that could take some time. And when Jay Powell says he's not going to be subject to political influence, he really's got to wait until they have conviction on what they're seeing and they see demonstrable evidence of inflation improvement before they could take any next step. And so, yeah, it could get uncomfortable here, depending on how long they pause. But if I were him, I wouldn't say I'm going to pause past, I don't know how long we're going to pause, and I wouldn't rule out March, but he doesn't know yet because we don't know how these puzzle pieces are going to unfold.
And Rob, you talk about the structural changes here, but there are also, personnel changes, meaning 4 Fed presidents rotating, Rob, into these voting roles on the FOMC, and 3 of them are thought of as inflation hawks. So what role does that play?
So during my years at the Fed, there were times I was called the dove. There was times I was called the hawk. I don't know that these labels mean that much. I think as a group, there'll be differences of opinion, but by and large, I think they'll agree on we need to see demonstrable evidence of continued disinflation before we do further rate cuts. There'll be differences around that, but I think that'll be their core view. And so I think even with new people, I think they'll congeal around that point of view. It's just the issue is we don't know the impact of all these different changes. My hope is they'll be positive and that disinflation will continue so that the Fed can move, but we just don't know that yet.
Well, and I guess that was the other thing I was going to ask you about, where you sit on that question of whether inflation is reaccelerating now or will it reaccelerate? Like, what are you watching to try and figure that out?
Through December, my own feeling was excess fiscal spending, historically high fiscal spending, was contributing to making inflation stickier, was blunting to some extent monetary policy. We're about to change that. We don't know how Doge will do. We know they're going to pause some of these programs, but I think the effort, I believe, is going to be to more organic growth. If that were to succeed, my own view is over time that would be disinflationary. Regulatory review is disinflationary. Improving the energy ecosystem is disinflationary. Tariffs, it depends how they do them. I wouldn't prejudge yet whether they're going to be inflationary or disinflationary. And labor force growth, if we had positive labor force growth, that would be helpful. But the point is, I don't know on those last two. So I'm cautiously optimistic, but I want to see the decisions that are made. And we don't know the decisions yet. They haven't been made yet. They haven't been announced. We don't know how far the deportations will go. We don't know what Doge is going to be. We don't know what the tariffs are going to be. We will, and we may know soon. And you've got to understand those pieces before I would need to understand those before I was comfortable making a judgment about what was appropriate to do next.
Rob, finally, I'm just curious what you make of President Trump's recent comments about the Fed. He's talking tough. He's pushing for interest rate cuts, Rob. He says the Fed should be listening to him. I know the Fed, central bankers will say they're politically independent. They follow the data. But, they're also human beings, Rob. They wake up, they read the paper, they got friends and family. Can they really be truly and totally independent, immune from pressure from President of the United States?
So I was at the Fed during the first Trump term. My own view is this: you're going to get criticized if you're at the Fed, whatever you do. If you pause, you're going to get criticized. If you move one way or the other, you're going to get criticized. In light of that, my best approach and advice is have a thick skin, work as hard as you can, make the best judgments you can, do your analysis, talk to contacts, look at everything you can, and make your best judgment without regard to political influence or political pressure. And I think that's what they'll do. And yes, you may need to have a thick skin during this period for the next number of months, but I think that's the approach they ought to and I believe will take.
Rob, it'll be an interesting press conference, that's for sure, on this week. Thank you so much. Appreciate it.
Thank you.